Right, lots going on in the north at the moment. And in fact, we heard that from Ras Al Khaimah Tourism Development Authority. The RACTDA was speaking to us this time last week about a number of initiatives that they've put in place given the current circumstances. Loads of domestic tourism coming up to the north. That's the current situation. But of course, if we think back, 2 months? If we think back to mid-February, Ras Al Khaimah was experiencing a major boom in more ways than one, marked by record 93% surge in domestic tourism. International tourists were flocking to the Northern Emirates, and that was also having a knock-on effect on the property market. Let's get a bit more of a take now on all things Ras Al Khaimah with Zacky Sajjad, the Director of Business Development at Cavendish Maxwell, who's come in armed with numbers, percentages and more. Ras Al Khaimah racking up 12.4 billion dirhams worth of property sales in 2025. Big numbers, sales up, prices up, rents up. But when we look into the numbers, or your numbers, Zacky, total transactions actually declined year on year. Explain that one to us.
Good morning. Yeah, thanks for having me. So yeah, we have seen record numbers in terms of the value of transactions, but the volume has dropped roughly about 17%. Reason being lack of launches, to be perfectly honest. The majority of the sales and transactions are off plan, unsurprisingly, as per some of the other Emirates. So with that, sort of a reduced number of launches last year meant there wasn't as many transactions.
You mentioned off plan there. The percentage you put on that, 85% of deals off plan, and that comes in an average of 1.98 million dirhams, so significant as well. Who is buying at the moment? Is this sort of investors? Is this end users?
Yeah, so we're seeing about 70% of the buyers are international investors into Ras Al Khaimah. So I think, unsurprisingly, that's been directly linked to some of the announcements, the Wynn being the main one. But yeah, it's predominantly international investors that are buying, who are buying an investment property. And
that's a shift because times were, and you spent the majority of life here, as have many of us. Times were where a lot of people were thinking, oh, maybe we'll get something of a weekend away home, a holiday home, etc. But now you're getting international investors eyeing opportunities there.
Yeah, absolutely. I think obviously it's been well documented about the sort of apartment hotel sort of business, and people are eyeing that with what's coming. The demand is going to be quite high with the Wynn, and then obviously there's a lot more resorts now that have sort of in the pipeline or being handed over. So it's become quite an attractive destination, as well as with the kind of experiential tourism play that they've kind of really sort of doubled down on in the last few years. So all of this has kind of come together with people seeing a lot of value initially in Ras Al Khaimah. Now, to the likes of you and I, we probably were looking at that and say, well, the last 12 months we perhaps didn't see that value. But again, when we look at it from an international perspective, on a rate per square foot, benchmarked against international markets, it is still quite attractive investment.
Must just mention at this point, or reiterate at this point, obviously you and the team at Cavendish Maxwell putting this data together on numbers that have been provided for 2025 are given. I know a lot of people will go, hang on guys, things have changed a little, but all we can do is work with the numbers that you've got from last year.
Exactly. So, and the numbers this year, we're still waiting for some of the numbers to be sort of published. But if we look at what we have seen, to your point and what you were saying earlier, the weekends have been very good. The last few weekends, from a hospitality perspective, again, probably similar to what we saw, in and around the pandemic, where staycations became the sort of the business that most hospitality assets were sort of targeting. So, we're starting to see signs, obviously positive news on the geopolitical front in terms of extension of ceasefires, etc. So hopefully that will have a positive impact. But if we look at it from purely the volume of transactions, I think it's safe to say we're probably going to see a reduction in the volume of transactions for the remainder of this year. mainly because there's going to be a lack of launches again. So
let's get into supply and demand if we can, because from the numbers that you put together, what does the pipeline and deliveries look like? And is that linked to the absorption rate? Isn't it strong enough there in terms of supply and demand?
Yeah, so over the next 3 years, we're expecting to see about 8,400 homes handed over in Ras Al Khaimah. So we had about 1,200 completed last year, with roughly about 1,900 expected for this year. And so again, the real big sort of anomaly comes in 2028, where over 5,000 homes will be expected to be handed over. So it'll be very interesting to watch the absorption rates come, sort of, I'd say 2028. But for now, when we're talking about 12 to 1,900 year on year, it's being absorbed positively at the moment.
Times were, and for a long time we've said, head north, go to Ras Al Khaimah, you'll get more bang for your buck. You will get more square footage for your money. Apartment prices are going up, rents are going up, prices are going up. Are we getting to parity? At what point do you lose that sort of tag?
I think you've got to sort of look at this and compare it apples for apples. So, a lot of what is selling in Ras Al Khaimah is waterfront property, and again, apartments that are, waterfront or, on the coast. So if you compared that to the equivalent in, say, Dubai, anything that was along the coast or waterfront, then there is, definitely a premium that you would expect to pay in Dubai versus Ras Al Khaimah. Now, if you average it out across the market, you probably see, less of an anomaly, So I think it really depends, but you've got to compare apples for apples. So I'd say if you're looking for a waterfront destination in an area that is, mainly going to be targeting the sort of tourism sector as a result of the Wynn, and so then, you're still looking at expected yields. Okay, this was caveated pre-conflict, but expected yields of sort of 7-8% plus, which is quite healthy for a real estate investment.
Not one, but two elephants in the room. First of those elephants is, as you've just mentioned, the current situation we find ourselves in. Uncertainty ain't great for investment at the moment. How exposed do you reckon the property market is in Ras Al Khaimah to what's going on at the moment?
I think there's been a lot of lessons learned across the UAE from previous economic downturns, if you like. So I think a lot of people have taken those lessons. I mean, ultimately, the central bank of the UAE and the banking system have got a lot of protection in place in terms of escrows, in terms of LTVs, loan to values, in terms of funding these developments. So, look, that doesn't mean people are immune from a potential sort of issues with their projects, but I would say the UAE is better placed than ever before to handle this sort of economic impact.
30 seconds. The other one, how much of this, in terms of pricing and investor appetite, is around one particular project that begins with a W and is on an island?
I think that's certainly having a big impact, for sure. So,
positive, all that.
Yeah, exactly.
Zacky, really good to see you.
Yeah, you too.
Thanks so
you
much
very
indeed for your time. Zacky Sajjad, Director of Business Development, bringing us the numbers from Cavendish Maxwell on all things Ras Al Khaimah.